We all use cash, right? But how much is too much in the eyes of the tax department? It's a question that causes a ton of confusion, a lot of myths. Well, in this explainer, with some great insights from the experts at Nimesh Harya and Associates, we're going to give you the clear, simple rules so you can handle your cash with total confidence. Let's get right into it.
So, let's just tackle the biggest myth right off the bat. Is there some magic number? A hard legal limit on the total cash you can handle in a year? I'm sure you've heard rumors, people throwing around all sorts of figures. So, let's get the real answer. And you might be surprised. The answer is no. There is no single fixed limit for the whole year. But hold on, before you run to the bank, you have to understand the catch. Because instead of a simple limit, what the tax department has is a whole web of rules. See, it's not about a cap. It's about knowing the rules of the game. So where did this web of rules even begin? Well, it starts with the most common thing all of us do with cash, putting it into our bank accounts, and of course, taking it out.
Now, it is absolutely crucial to understand that the government looks at deposits and withdrawals very, very differently. When you deposit cash, their main question is really simple. Where did you get this money? You have to be able to prove its source. But when you withdraw large amounts, their goal is totally different. They just want to collect a little bit of tax right then and there, up front.
Let's drill down into deposits. Look, you can technically deposit any amount of cash you want. But, and this is a big but, the second your total for the year crosses 10 lakh rupees in a savings account or 50 lakh in a current account, an automatic flag goes up. Your bank is legally required to report that to the tax folks. So what's the key takeaway here? Be ready to prove where every single one of those rupees came from. And the risk here, it is huge. Just imagine this. You deposit 15 lakh rupees in cash. If the tax department asks about it and you can't prove where it came from, they can call it unexplained income. And the tax on that? It's not your normal rate. Oh no. It is a jaw-dropping 60%. And that's before they start adding on other surcharges and penalties. That is a seriously costly mistake to make. Okay, so that covers putting money in. Now what about taking money out? Well, the rules are different, and it all revolves around one very big number, 1 crore rupees.
So what happens the moment your cash withdrawals for the year go over 1 crore? Well, your bank will automatically deduct a 2% tax at source, that's TDS, on every rupee above that 1 crore mark. Now, it's really important to get this. This is not a penalty. It's just the government collecting a little bit of tax in advance. You get full credit for it when you file your tax return.
All right, so that's the bank side of things. But what about all the cash that never even touches a bank account? The money you're using every day to buy things or to get paid. Yeah, there are some really strict rules for that too. For anyone out there who runs a business, this first number is one you absolutely positively cannot ignore. 10,000 rupees. This rule is specifically for business expenses. If you pay more than 10,000 rupees in cash for a single expense to a single person on a single day, you lose the right to claim it as a business expense. It gets disallowed. In simple terms, that amount gets added back to your profits, which means you pay tax on money you've already spent. So that 25,000 rupee cash payment for repairs, you can now think of that as 25,000 rupees of extra profit that you're going to be taxed on. Now let's flip to the other side, receiving cash. And listen, if there's one number in this entire explainer you have to remember, it is this one, 2 lakh rupees.
And let's be crystal clear about this. This is not a guideline. It is a hard prohibition. You are legally forbidden from receiving 2 lakh rupees or more in cash from one person in one day for one transaction or event. If you break this rule, the consequence is probably the most severe in the entire tax code, a 100% penalty. You pay back the entire amount you received.
Just think about that for a second. You sell something and you accept a 3 lakh rupee payment in cash. The penalty isn't some small fine. The penalty is the full 3 lakh rupees. You essentially just hand the entire payment over to the tax department. It's an incredibly powerful rule designed to make these large cash deals pretty much impossible. So, we've got all these different pieces, right? Deposits, withdrawals, expenses, receipts. Let's pull them all together in one place so you can see the full picture and really understand the high cost of getting this stuff wrong. This table is a great little cheat sheet. For cash deposits, no limit, but you gotta expect scrutiny. For withdrawals over 1 crore,
you're going to see that TDS deduction. For business expenses over 10,000, it gets disallowed. For receiving cash over 2 lakh, a very painful 100% penalty. And pay close attention to that last one, because it catches so many people. Even for personal loans, accepting or repaying more than 20,000 rupees in cash can trigger that same 100% penalty.
Okay, I know. After all those penalties and all that risk, you might be feeling a little nervous about using cash at all. But don't be. Protecting yourself is actually pretty straightforward if you just follow a few simple steps. Here is your 4-step safety plan. Step 1, and this is the most basic. Keep good records. Your cash book, your bills, your vouchers, that's your best defense. Step 2, make sure you reconcile those records with your bank and tax statements. That's how you catch any problems. 3, for any big transaction, just make digital your default. It creates a perfect automatic trail. And finally, and this really is the golden rule, always be prepared to document the legitimate source of any large amount of cash that comes your way.
So, if you remember just one thing from all of this, let it be this key principle right here. The goal isn't to ban cash. The goal is to make sure that every significant cash transaction is justifiable, traceable, and compliant. As long as you can prove where it came from and you followed the rules, you're in the clear.
So to wrap this all up, stop looking for some simple limit and start focusing on justification. Remember, your paperwork is your strongest shield. If a transaction ever feels like it's in a gray area, just go digital. At the end of the day, knowing these rules isn't about some clever tax trick. It's about protecting your own hard-earned money from massive and totally unnecessary penalties.
We really hope this explainer on cash transaction rules, based on the insights from Nimesh Harya and Associates, has given you some real clarity and confidence. Of course, for your own specific situation, especially if it's a bit complex, it is always the best idea to consult a professional. Thanks so much for watching.